Jack, where do you think this, when all the dust settles on the XPO Home Depot merger, what do you think that's going to look like?
Okay. I'm going to repeat the question because we're taping this whole thing. The question is, where is the dust going to settle on the possible acquisition of XPO Logistics by Home Depot? Many of you may not be aware of that rumor, but XPO, by background, has gone from essentially nothing. It was formed as a company maybe 5 years ago. In fact, when I teach my MBA classes, this is one of the paper topics every semester here, is that the XPO story, because it's gone from nothing to a $15 billion enterprise. XPO are the #1 LTL carrier in Europe. They're the #2 LTL carrier in North America. Very, very big on home delivery. The #2 warehousing company in the world. Very integrated, very successful logistics company. So the rumor that came down the pipeline in the last 2 weeks is that Home Depot is going to purchase XPO basically to block Amazon from acquiring XPO. Very hard to call that one, John, that I don't know anything more than anyone else in this room knows, but number one, Home Depot can very easily purchase XPO. XPO about 15 billion in revenues, Home Depot is about 85 billion. So it would be a pretty easy swallow for them. It's not a money situation. I can certainly understand the Home Depot concern that Amazon can be a factor in any market they want to get into. It's a big concern for companies like Home Depot that provide spare light bulbs, hardware, and things like that. If Amazon wants to get into that business, and they do, who's going to get hurt? It'll be the big players. It'll be the Home Depots of the world. I don't think it'll be the true value of the local hardware guy. So I could see where Home Depot would react. Home Depot, under the current leadership, they're outstanding at logistics. And I forget the name of the senior VP, Mark, drawing a blank on his last name, but he came in from Office Depot a few years ago. And Home Depot is a real laggard in logistics. They're one of the leaders today in this country. Very, very strong company, very adept management, really know what they're doing, and really solidified that company. I was kind of surprised when I heard that comment, read about it. Really kind of caught me off guard, but it wouldn't surprise me at all. It would be a pretty easy swallow, and it would certainly block the competition, and it would make Home Depot much more successful at what they do. Because ultimately, they're not making anything. They're bringing freight in, they're shipping it to the stores, and then from the stores to people's homes. E-commerce is going to be a big factor, is a big factor in their business. This would really help them solidify, and especially that last mile delivery that XPO is so strong at. Hey, I've got to get a delivery of a bunch of refrigeration units to the Niagara University campus or to a job site, things like that. Well, right now, Amazon has, Home Depot has to farm that out. I have to hire some company. Well, what if I had that capability internally? So it would really give them an edge. It wouldn't surprise me at all to see them make the move. I wasn't expecting it, but as I thought about it, yeah, it makes a lot of pretty good sense. And XPO, for those of you who don't know, in fact, one of my MBA students, after he did the XPO paper, he came to me and said, Prof, my family and I just bought some shares in XPO. I was so convinced that this was before the announcement. Well, the shares had jumped up significantly, so I'm sure he's smiling all the way. But XPO has been built to be rolled out to the public with shares. Well, this is an easy way for all the investors to make a lot of money. And I don't think Brad Jacobs, who assembled XPO, cares where it goes. He's a financier. He's not in it because he loves logistics. He's in it to make money. So are his investors. Well, if they get a good deal here from Home Depot, the thing is gone at that point. And then Home Depot has also got the ability to parse that thing into pieces. Let me keep the stuff I really want. And there's a truckload business. I may not want that. I may not want this stuff in Europe. So they've got the ability to sell off pieces. My guess is that if you sold off the pieces, it would fund the entire purchase. Anybody else? Questions? Craig?
Jack, is there anything to be read into the president going after Amazon and their U.S. postal rates?
Okay. So the question is there anything to be read into President Trump going after Amazon and the impact on postal rates? And for those of you who aren't aware of the issue, the president is on record as saying that Amazon is basically taking advantage of the American economy, the American public, because of their heavy utilization of the Postal Service. The reality is that the Postal Service does not make money. they lose money. I don't know what it is. I've seen numbers as much as like $1.50 a parcel. For every parcel they deliver, they lose $1.50. And so they take business, and you see this time and time again that FedEx and UPS will walk away from some business. The Postal Service announces, hey, we're going to take that business on. Well, that doesn't make any sense, but people always remember, they don't have to make a profit for the Postal Service. So I don't think there's any question that all of us in the room are subsidizing the Postal Service through taxes because they run at a loss. What Congress really should do is up the price of the postal fees, the stamps and everything else. That if you go to Canada, first class letter there, I think it's close to $1. I think it's the same in Europe, more than $1 for a first class letter. We're still less than 50 cents. They got to be losing money on every one of those. Same with the Parcel Service. But any time that the Postal Service asks for a rate increase, Congress gets in the middle of it and mentions some retired woman down in Jacksonville who can't afford to pay $1 for postage, so keep it at 47 cents, and then we all subsidize it. So there's no question that a big user of the service is getting the free ride on the coattails of the American public. You can't argue with that statistic. It's fact. There's a fix available through government. Let the Postal Service raise the rates, but I don't see that happening anytime soon. I don't see Amazon backing off. It's part of their business. So I'm not sure where that's headed. That I can't see the government punishing one company, for example, but it's a realization of the facts and recognition of it. But I don't think that whether it's the president or anyone else, they're not going to shame Jeff Bezos into changing his business model. If you want me to stop using it, then pay me something, or let's negotiate something. But it's a very real situation.
I might want to add this. They actually raised rates in September, and they're also raising again in March for the post office.
Okay. The addition from Prof. Kling is that the parcel rates by the Postal Service, they were raised in the fall, September, and then slated to go up again. And I think it's just that attempt to try to close the gap. They're getting so much business now with e-commerce, and especially with the home delivery through FedEx and UPS. They're a big factor. They've got to be able to cover their costs better than what they've done up to this point. There was another, Chris.
This is more towards, I have one for Dr. Kling and a quick one for you, Jack. Dr. Kling, you mentioned that the ISM hasn't been at this level since like 2006. And I wasn't sure if you've seen the recent trade data. We had a record amount of import and exports with the U.S., but as a result, we've seen a record trade deficit. Recently in the news with China, they decided not to purchase U.S. treasuries, which results that affects the U.S. debt. Japan has also tightened their fiscal bank as well. At the same time, we're seeing this record amount of people invested into cryptocurrencies. And I'm throwing all these different factors out there because a lot of things that you presented strikes me that I see a lot of correlations between the dot-com burst of 1999, late 90s, and also pre-financial crisis of 2008. Do you think that we could be heading towards a possible recession down the road, like where we see some consistent growth with the recent, changes in the tax laws, but then suddenly after a recession would follow?
Come on up here, Jim. Want this?
Well, it's an outstanding presentation. We just kind of where we're trending. I know with the growth we're seeing, but where we're seeing recently in the news and the geopolitical environment and what's happening in the economy. Is anybody following those correlations?
The questions you had about cryptocurrency, Chinese purchase of bonds, trade deficits, are we entering a bubble? I think that's basically your question, right?
Yeah, that's fine.
It's a good question. If any of you watch CNBC morning show the last couple of days, it's been the topic actually. Cryptocurrency, by the way, crashing this morning. I don't know if you saw that, but it's hurting. And the bond purchase in China kind of concluded by a lot of business analysts. It said that, I'm trying to remember the exact rationalization. It said that it's been on a slow path of decline, and they still are purchasing a lot. It's not necessarily a dramatic change in what they're doing. But it's still a good question. I mean, it's the stock market valuation is the thing that kind of scares me a little bit. But the amount of positive news that's come out over the last 6 months is a surprise to everybody. And to me, it supports, at least for the time being, continued growth. Like in the auto market, which I was concerned about, I think that tax cuts could easily keep that market strong, at least for another year or two. What happens after that is a good question. No expansion is going to go on forever, right? Especially if you start to see inflation. I think interest rates are a concern. Like I've started to try to look, I haven't really got the answer to how much student debt is tied to variable interest rates, which would be an issue. Certainly a lot of home equity loans are variable interest rates. Those could become things that have an impact, not necessarily in the next 6 months, but going out a year or more, I think that would be a thing I'd be concerned about. Certainly a turnaround in the House in Washington could cause a stock market correction of some significance, I would say. So there's a lot out there, but I'm an optimistic person generally, but from an economics point of view, I tend to try to be skeptical and somewhat of a contrarian. And just the amount of positive stuff that's happened over the last 6 months has surprised me. And I think that momentum will carry well into 2018 would be my forecast. After that, and of course a bubble is a bubble.
And that's led my question, because with a lot of the things that you're presenting, I thought it was a fantastic presentation.
Yeah.
But I see a lot of similarities, almost like what we saw like 97, 98 before .com, and then also around 2005, 2006 where oil was rising. I think it was record high in 2007. And it felt like it was all of a sudden where we see these rising prices that are occurring, what's going to prevail down here?
So the follow-up comment is, does this look like 1999? And I was following the markets closely then. The .com stuff was, I think, a legitimate bubble. Go and look at the profits of Apple. Go and look at now the growing profits of Amazon. Go and look at the profits of Facebook. They're not like, well, maybe someday. They are big, big profits now. Then take the corporate tax rate dropping, from 35% to 21%. And all of a sudden the valuations of those companies, I mean, the tech stocks have done extremely well, but it's not irrational. The amount of money those companies are generating out of digital businesses is very, very impressive.
Thank you. And then a quick one for Jack. I'm sorry. Jack, there was also a rumor that Amazon was looking to buy Target. I don't know if you can comment or if you've heard anything about that.
So the question is that there was a rumor that Amazon may be purchasing Target stores, and did I have any reaction to that? I've not heard that particular rumor. Offhand, I would say I don't see any real benefit for Amazon unless it's to get the retail footprint that they can steamroller Target if they wanted. They seem to be going after niche things like Whole Foods that can give them some advantage. I don't see an inherent advantage over acquiring Target, that unless it's just to get a retail footprint where I can put more stuff out in the street versus e-commerce. But Target, I think, is very acquirable. That they've had some issues. They're not nearly as big as a Walmart, for example. So if somebody wanted to buy them, I think it could be a done deal. Any other questions? We have one other one along the line there. Yep.
I have a question about the oil. In the last presentation, you mentioned Russia and that they were suffering from infrastructure. How are they doing this year? Are they still a big player?
So this question, and what's your name?
Malata.
Malata asked question, actually follow up something I said 6 months ago at a presentation about Russia struggling with infrastructure issues. And I can't say I've read a lot about Russia since then. I have read that they are trying to get into fracking, that the western part of Russia is probably the best fracking region in the entire world. And that if they can get in there and successfully do that, that will significantly improve their oil production. Russia needs a higher price of oil probably more than any other country in the world. And so they have, you can easily figure out what their incentives and their motivations are simply by saying whatever it takes to drive up production and drive up price, they're gonna do. That being said, I don't know that a lot of Western companies are comfortable doing big investments with Russia at this point. Certainly the political environment here in the U.S., I would think it would be difficult for U.S. firms to be working too closely with Russia. But I can't say that I've read or really have any new information on it.
Anybody else? Okay, Marie.
Jack, a quick question. Regarding the railroads, I've always been fascinated with railroads and the way that they've grown throughout the country's history, but where do you see them as a fit for possibly picking up the reduced volume or potential volume of the truck companies?
So the question is about railroads, that are they a potential factor in picking up additional volume from the trucking industry? And the one comment I would make to start with is that Warren Buffett bought a railroad. He bought Burlington Northern Santa Fe because he was convinced that it was a great investment. Never wants to lose money, so he's in the railroad business. The railroads, I think, have a very definite play. Coal was the #1 moneymaker for rail for many years. It no longer is because of our push away from using coal to generate electricity. And so what's happened is that intermodal, picking up ocean containers or road containers and putting them on, or trailers onto the rail and then railing them, that's become the #1 factor for the railroad business in this country. And I see that continuing because we have trouble finding long-haul truck drivers. Ports like New York City, Jim Mano, who's president of the International Trade Gateway Organization here in Western New York, is in presence here today, and that organization has an agreement with the Port of New York, New Jersey. Nobody wants more truck traffic in the Port of New York, New Jersey. It's just too congested, too much pollution, very difficult to maneuver in there. So one of the things that's being done here in this state is that there is a written agreement between the Port of New York, New Jersey, and Western New York, the Buffalo area, that what they would really endorse is lifting ocean containers off the ships onto rail, railing them here, and then from here onto truck to Pittsburgh, Cleveland, and Toronto, versus trying to drive them. So I think it's a terrific factor. Normally we've thought of intermodal as long haul, from here to Chicago and beyond, to Denver and so on. But the railroads are aware of the opportunity. I think they're really sharpening their ability to do short haul on intermodal, less than 500 miles, for example. So if you want to invest in railroads, I would think it's a very good factor. I see nothing but positives for the railroad. Trucks have a problem with drivers. Nobody wants to raise the weight limit. There's a safety factor. So there's a bunch of things playing in favor of the railroads. So I would think we're going to see that whole intermodal thing continuing to grow at a pretty fast clip. Anybody else? Peter.
Jack, what do you see as disruptive technology in the railroads?
The question is, what about disruptive technology in railroads? What is out there? I'm not coming to mind with one significant thing. I know that there's continual investment. One of the things I was able to do in the last 2 years, I went to the General Electric engine building factory. Most of you in the room probably don't know that the GE is the world's largest provider of railroad engines. Their #1 facility is in Erie, Pennsylvania, 90 miles from here. And so they're continuing to refine the engines, much more computerization, being able to throttle back some cylinders, things like that. So there's a continual investment. I think the thing that they really need to fix is the ability to track the rail cars, that they've had those barcodes on the rail cars for years. It's highly unreliable. The barcodes get broken, they get dirty, they're not readable, so companies have trouble tracking the rail equipment. If they could get that fixed, and every one of these railroads, you heard about the precision railroading from CSX, they're all working the same way. They recognize the technology opportunity, are investing the way that they can. But I don't see one particular thing. I don't see something like an Uber, for example, jumping into rail. I see a refinement of the practices and using more technology to make the present practices better.